What's up, Squares? Harold Perkins here, and today I'm going to talk to you about my favorite type of loan to do. It's the VA loan. The loan is designed for our active, reserve, and retired military men and women. And of course, the best home loan program that's available in the United States should go to those who have served and sacrificed for the rest of us. Thank you. So if you're active in the reserves or a veteran, here's why you should use the VA home loan program in pretty much any possible scenario that you might need a home loan. First, we'll talk about purchasing a home. One of the biggest benefits is that you can purchase a home with no down payment. VA financing goes up to 100% of the purchase price with no maximum. Yeah, that's right. A VA eligible borrower could buy a $100,000, $500,000, or $5 million house with no down payment. Then to sweeten the pot, there's also no PMI or private mortgage insurance required on a VA loan, even on a loan with no down payment. So right from the jump, a VA buyer will have a lower monthly payment than the rest of us that purchase with less than 20% down because of the PMI. I'm okay with that. But wait, there's more. On average, the interest rate on a VA loan is 0.5% to 0.75% lower than what it is on a conventional loan. Now, I don't know if our government did this on purpose, but here's the reason VA loans have a lower interest rate. If we go back in time to 2008, we would find that VA loans and conventional loans had very similar interest rates. So what changed? Well, most of us will remember the financial crash of 2008 and the resulting government bailout of a lot of the larger financial institutions. Of course, the US government needed to find a way to recoup the money from the financial bailout, so they did this by implementing guarantee fees, or G fees, to Fannie Mae and Freddie Mac home loans. Those are the conventional loans, but G fees don't apply to VA loans. Nice. Fast forward to 2020 and it all happened again. A lot of money was put out in stimulus and PPP loans due to COVID. So to pay for that, more G fees. But it's the banks that give the mortgages that have to pay the G fees, so let's not kid ourselves here. The banks have passed the G fees on to the consumer in the form of higher interest rates on conventional loans. And that's how we get VA interest rates that are significantly lower than on conventional loans. So far, this is amazing. Let's talk about who's eligible for VA loans. First are all the active duty service members. If you've been active for at least 90 days, then you're eligible. Then come the veterans. The biggest group are the Gulf War veterans, so that's anyone from August of 1990 to the present. In this group, if you were activated for at least 90 days or you served 24 months without being activated, then you're eligible. Most other veterans that did not serve during the Gulf War era require 24 months of service or 181 days of active duty. And finally, the reservists. Again, if you were activated for 90 days during the Gulf War era, then you're eligible. Otherwise, 6 years' time in the selected reserves is required. And of course, all scenarios require an honorable discharge if you're not currently active. I have another, but wait, there's more. VA has no minimum credit score to be eligible. Individual banks may implement their own minimum credit score requirement, but VA itself does not impose a minimum score. Now, that doesn't mean that any credit history will be accepted for a VA loan. The general rule of thumb that I like to use is that if your credit history has been good for the past 24 months, you're probably going to get approved for the loan. So you could have had some credit problems in the past and then have gotten things under control during the past 2 years, and if that's the case, you're probably good to go. 2 years from the discharge after a Chapter 7 bankruptcy is okay, as well as just 1 year into a Chapter 13 bankruptcy is okay. VA also has no maximum debt to income ratio. Yeah, that's right. For a VA loan, residual income is more important than debt to income ratio. Residual income is the amount of money you have left at the end of the month after paying your income taxes, monthly obligations, home maintenance, and utilities. There are minimum requirements for residual income based on how many people are in your household. The larger your family size, the higher the residual income requirement will be. Well, that makes sense. But did you know that if your actual residual income is 120% or more than the minimum that's required, then debt ratios do not matter? One feature that VA loans have that can be more expensive than conventional loans is the VA funding fee. The VA charges a fee for the guarantee of your home loan, and this fee varies depending on a few factors. The first time you use your eligibility to purchase a home, the fee is 2.3% of your loan amount if your down payment is less than 5% of the purchase price. It goes up to 3.6% of your loan amount each subsequent time you use your VA eligibility if your down payment is less than 5%. With 5% down, the funding fee reduces to 1.65% of your loan amount and 1.4% of your loan amount at 10% down or more. But one of the best benefits of all is for Purple Heart recipients or any veteran that receives any percentage of disability benefit from the VA. If this is you, you are exempt from the funding fee. You don't pay it. But if you do have to pay the funding fee, don't forget that your interest rate is 0.75% lower than on a conventional loan, and you don't have PMI. The math of that will show us that the funding fee is less expensive than the higher interest rate and the PMI on a conventional loan. Now, I know that there is a certain celebrity financial guru that advises against VA loans because of the funding fee. He is wrong. He needs to check his math. I've only just begun to scratch the surface of the benefits of a VA loan. I could go on for hours. But if you have more questions about VA loans, please hit the like button, ask your questions in the comments below, or message me on any of my socials. Otherwise, you'll have to wait for my next video with additional benefits of VA loans. Later, nerds.